Greetings, members, one and all of the Salivation Nation. Embrace the dip, because higher gold prices are coming. Let's explore! Yes, this is from an analyst brought to us through Kitco from Niels Christensen. Andrew Height is making this call. And while you're here, I'm not going to say anything about pressing the like button to you guys. I'm not going to make one mention of that because it will help the algorithm. And maybe you don't want that. But regardless, let's move ahead here. The gold market has been unable to break its chains as the price hovers around $1,900 an ounce. So it has sort of been in the doldrums. We saw it kind of scoot up a bit and then move back down, and it kind of lost its gain. It was halted, as I talked about in a video very recently. One commodity analyst said that price action isn't a bad thing, as it's allowing investors to accumulate a strategic precious metals position in their portfolios. This is from a telephone interview with Kitco News. Andrew Height, partner at BubbaTrading.com, said that investors should embrace lower prices in this current environment. He says, I embrace any dip in gold. I want to see lower prices because that means I can just buy more. Now, where have we heard that before? Probably in the comment sections of many of our videos. You know, buying opportunities abound with these price dips. But I would caution folks whenever they do that, and even myself, because we tend to get hung up on these big price movements, and then we see what's known as that sawtooth pattern and the movement of the gold and silver prices. But sometimes a dip can lead to another dip or an increase and then a further dip down the road. And that kind of discourages us, especially if you are buying silver, because it's even more volatile. But he's saying that we are just starting to what I expect is the next commodity super cycle, and that will mean higher gold and silver prices. Height said that he expects that gold prices will push through $2,000 an ounce next year. He added that silver is headed in the same direction, and he sees new all-time highs within the next 2 years. The purchasing power of all fiat currencies is falling, and that will make commodity prices go higher. In this environment, you have to have some gold and silver, he said. Every currency is in a bear market compared to gold. Well, that's for sure. I mean, we are flirting now with record highs again. You know, gold is now below that all-time high of the nominal price of $1,920. In fact, we look at the charts right now, we see that gold is trading at 1903.40, literally about an hour and a half before the close, and silver is down 16 cents, but it's at $24.64, well below half of its all-time high. So it has a lot more room to make that move upwards, but gold is hanging on to its near record high, even at this point. As to what the spark that drives gold higher, Height said that continued stimulus spending will drive gold prices higher. He added that no matter who wins the November 3rd U.S. general election, the government will be forced to pump more money into the economy before the end of the year. And he's right about that. And notice that he is being very general in terms of this general election, because it's not just for the presidency, but it is because of the House and Senate as well. And so that does tend to lend itself to a lower dollar index, which we've seen when there's talk of stimulus and when it's enacted. And we'll see how that plays out. As to which candidate will be the best for gold, Height said that Democratic nominee Joe Biden has a slightly better advantage because he is perceived as a candidate who will unleash the most stimulus. And that also bodes well for silver. I actually posted a video not too long ago about how Joe Biden will be very good for silver. Regardless of the election, trillions of more dollars will be printed by February, and that is going to drive gold prices higher, he said. You want to have a position now so you can take advantage of the rally. And now keep in mind, if this passes, it will be the fourth round of this relief package for the coronavirus. But, the thing is taking advantage of a rally that may come is also means there could be some massive dips too for other reasons. If there's some good economic indicators that will drive the price of gold and silver down because of a strengthened dollar, it may not matter how much more currency is printed. The dollar index is weird in that regard, although it does tend to move inverse to the number of bills and digitized dollars that are out there. It could still make a strong comeback compared to other currencies out there because that's its measure. That's the dollar index's measure against other currencies. And so there is room to print, apparently, in that regard, especially when you do have a strong dollar compared to other currencies out there. If everybody's doing it, that's the old adage, hey, well, everybody else is doing it. Your mom told you that doesn't make it right. But it does provide a precedent. And right now the precedent is fiat currencies and printing of those fiat currencies. And as is mentioned many times, you cannot print gold. You cannot print silver. And so that is something that we can celebrate and while we accumulate these metals. So as to how investors should structure their gold position, Haidt said that investors should have a core holding of 10%. At the same time, investors can hold another 10%. That is a tactical position where they trade in and out. Now, it doesn't really mention silver there, but I've heard anywhere between 5% of your portfolio and up to 35% of your portfolio. I think for many of us in this community, it's probably a lot more than even 35%. I know it is for me. I think holding 20% of your portfolio in gold makes sense in this environment, he says. But know that 10% is a flexible position. I like to think of it as aggressive investing, he said. You can maximize your investments by taking profits on the way up. When the market looks terrible, that is when you want to buy. And when everything looks perfect and nothing could go wrong, that is when you start to take some profits. Haidt added that the gold price is expected to go higher. Investors should look at holding some mining equities. The easiest exposure is through mining exchange traded funds, he said. Haidt added that he always recommends the Van Eck Vectors Gold Miners ETF and the Van Eck Vectors Junior Gold Mine. He really likes the diversification of these two ETFs that they have to offer. If gold prices are going higher, then this is the time to own the miners and take advantage of the market's built-in leverage. Although I've likened that kind of investment to the miners as buying stocks, regular stocks. And any company can have a promise and potential, but they also have little intricacies and details and information that you really need to know about before you and to be educated upon before you and get in too deep with some of these miners. To me, I just stick with gold and silver. And what kind of gold and silver do I hold? Physical gold and silver. Yay! To me, it's the easiest. It has no third counterparty risk, and you get to hold it. You get to flip it. You get to touch it. And, I mean, there's some drawbacks to it as well, too. Premiums and loss of premiums when you do sell. But by and large, I think having it held in your hands, I think is worth those premiums in my view. As for gold as an international currency, Haidt said that he sees the most value in buying gold in U.S. dollar terms. Well, I mean, it's one of those things where if you're buying gold in the United Kingdom or Germany, or whatever currency you're buying it in, it's a matter of holding the gold in your hand. It doesn't matter how you're obtaining it, what currency you use to get it. So I don't really understand that. He says, I wouldn't buy gold in Canadian dollar, Australian dollar. In a secular bull market, these commodity currencies, I think, will do well. The best value for gold is in the US dollar. Maybe he means that those currencies are already pegged high and it's not worth it to do because of where they're at. I don't know, overvalued in their currencies. What do you Canadians think? What do you Australians think about that? I guess the exchange rates tells us how those dollars are when their strength compared to the US dollar. And if they're in a weak position, being pinned down by the dollar, maybe gold is overvalued in terms, and maybe he sees some recovery for those currencies. I don't know. Regardless, I know from my vantage point, and I think for any country's vantage point, it's probably good to have some gold. But keep in mind, it is high, and some people still think gold is overvalued. And some people even think that silver is overvalued too. But you know, it's anybody's guess as to where the markets will go and where the metals will go. But higher gold prices are coming, according to Andrew Height. I think there's some potential for that for sure. But always be prepared for an even further dip. Could come. It has surprised us before, and that is the other side of the spectrum to consider whenever you take into account bullish sentiment such as this. So there you have it. I hope you enjoyed this video. Post your thoughts in the comment section below. And remember at the very beginning of the video where I said that I'm not going to encourage you to press that like button? I'm still going to hold on to that, so I'm going to leave that part out when I encourage you to please rate, share. Oh, wait a minute. I just said to rate. Forget it. I just completely went back on my word. It's so habit forming that for me to say rate, share, comment, and subscribe, I forget. I don't want to tell you to rate it. I want you to do it on your own free will. So ignore that. A multitude of gratitude to you all for being here.